Oh, we are. We did it. We're here.
No, we're not. There we are. Now we're live. All right. A little bit of technical difficulties, but we're here. It's Monday morning and another episode of Go FUD Yourself weekend news roundup. Kind of like week in crypto news roundup.
This was really weekend. There was a lot of stuff that happened today. So,
well, we're going to fill you in. What are we talking about today?
Okay, first of all, we're going to talk about the SEC chief crypto enforcer, David Hirsch, stepping down. It seems like a big deal and was just announced today. Obviously, it's been in the works for a while, though. We're going to talk about NVIDIA with the Supreme Court. We're going to move and talk about kind of what's happening with crypto startups and TradFi. So we're going to talk about some of the investment that's already happened and then what BlackRock is doing. We're also going to talk about European parliaments, kind of exciting. And then this is a wacky episode. We get crypto arms race, we get degen news, we get everything. We're going to talk about PancakeSwap, and we're going to talk about the RCMP and a scam.
Perfect. Wow.
Jeez.
Let's go.
All right. The news that everybody wants to talk about is that Chief Crypto Enforcer David Hirsch steps down from the Securities and Exchange Commission's Crypto Asset and Cyber Unit. He was previously the head of it. He's resigned after nearly a decade, about 9 years of service. His departure marks the end of an era of significant regulatory actions against crypto exchanges and DeFi platforms. He was quite instrumental in shaping the SEC's approach to crypto regulation and oversaw, basically all of the high-profile cases in the last 9 years. JD, what now?
Yeah, I don't know. Honestly, I was kind of surprised about this. It seems like an interesting time for someone to step down. Like the SEC chair and so on, I believe, comes up for appointment again when the presidential election is over. And so it just seems a little odd. I think, the stance of the SEC has been, in my opinion, fairly dependent upon a few key people in the regulator. And I think, this Hirsch and of course Gensler and a few others have been fairly instrumental in crypto enforcement. So I'm hoping maybe it's a bit of an end of an era where some of that kind of philosophy and mentality and approach goes away with David. They were just regulating by enforcement, essentially. And what we've been saying for such a long time is first provide some clarity so that we can all adhere to said clarity and then enforce the people that aren't paying attention. So
in relation to enforcement, he was previously an enforcement attorney at the SEC's Fort Worth office. So it makes sense that was his approach. Maybe they'll bring in somebody who is more into regulation and governance instead of enforcement if the market's going to keep growing and if we're going to keep having TradFi incumbents. Now what?
It's a pretty big feather in his hat. There was a lot of revenue generated from suing crypto companies over the years because the settlements were fairly sizable. There's a weird feather in their hat trying to, litigate as much value as possible and so on and so forth. And, somebody that their tendency is to litigate and, enforcement through litigation. I guess they're going to do the same thing.
Question. Do you think that this is foreshadowing Gensler stepping down soon?
I hope so. But I have no idea, honestly. I keep thinking Gensler can't have the support for another reappointment, and I don't think he wants to go down other than on his own terms. That being said, I've thought that for years. I don't know how he got reappointed last time, so I have no idea. I hope so. There's always the risk that it could get worse. They could appoint someone that has even a stronger negative stance on crypto, or someone that is even more inclined to litigate the little guy or something. I don't know. But generally change is good. So let's go. Let's go.
Well, tell us about current litigation going on.
Yeah. So speaking of litigation, this is kind of an interesting one. The U.S. Supreme Court, for anybody that's been paying attention, the U.S. Supreme Court is reviewing a securities fraud lawsuit against NVIDIA, which is pretty big. NVIDIA being one of the top 3 market cap companies in the world, obviously. The case stems actually from allegations that NVIDIA misled investors about dependence on crypto mining revenues and what would happen if those revenues fluctuated, which they did. And obviously when they fluctuated, there's a fairly steep price drop in the stock. Some shareholders in this time period, generally between 2017 and 2018, were pretty upset about what they feel to be a lack of transparency. And so they have a lawsuit. And now I think there's some pretty big implications of this. This will really start to create precedent for shareholder rights and the different things that they can claim. What are your thoughts on this? Like, do you think this is like much ado about nothing, or is this a pretty pivotal case in securities law?
I think it's an interesting case for securities law, but it's also an interesting case in terms of crypto, because one of the things that we are facing all the time is, are we disclosing enough? Are people buying tokens, purchasing securities? Are they acting like shares? Are we providing the information? Are we transparent enough? And then that's when the DAOs come in too, right? Should we have more say in what's going on with the tokens that we purchase? And as much as we want to say that securities and stocks and what have you are very different, in current regulation, people are trying to make them similar. So I think that this might also impact how we'll enforce against crypto companies going forward as well, DeFi companies going forward as well. And that might not be immediate, but I think that's something that this could impact in the longer term. Totally.
I think it's been something that we've probably as a space been criticized for, and probably aren't performing properly. And that just is in the shareholders or token holders' rights. What actual rights do they have? What responsibilities for disclosure and transparency do these entities have? I think in crypto, unfortunately, there's quite a few fairly high-profile cases where a little bit of sunlight could have saved a lot of loss. And true. I mean, so yeah, this will be an interesting case. One thing that this kind of rubs me a little bit the wrong way is NVIDIA surged in value so insanely much in the last 5 years, in particular in the last 2 years. Like these shareholders, like to me, this is like, what the hell are you crying about? You had the most performant company on earth in the last 5 years under the leadership of the exact same team. So, I mean, yeah, totally.
It seems a little bit outdated. It's kind of like going back to Shaq now and being like, you shouldn't have been pro crypto in 2017, right?
I mean, even with a bit of a lack of transparency, a pile of cash has come into the space.
Totally.
Let's talk about that.
No, wait, hold on. I gotta talk about one other thing here. That was really smooth though. I'm sorry.
Yeah.
Okay. I want to talk about the FUD about this type of article, because a lot of the crypto news coverage related to this article is saying that NVIDIA should win because what you just said, they already brought more value to their shareholders. What even counts as evidence? How can we hold them accountable to report properly? Whereas all of the articles that are coming from a more trad sense say, hey, look, NVIDIA has really screwed its shareholders over. And I'm curious to get your thoughts on how crypto entities should be approaching this. Should they be saying, yeah, we want to do less due diligence, we don't want to be held accountable to shareholders in this way? Or should crypto companies get on board and say, yeah, we should be more transparent and we should have better forecasting?
I probably live firmly in the latter camp. Not necessarily because I don't think there's a world where the former could work, but more because I don't think there's a regulatory body on earth that will allow the former. The reason most regulatory agencies exist is disclosure and transparency, and to enforce a lack thereof. So do I think we're going to have an opportunity to have very little transparency legally? No. There's another interesting case kind of along these, not along these exact same lines, but Elon Musk, a court, he had a $56 billion option or warrant or something, I can't remember, that he could execute if he 10x'd the stock price over the course of like 4 years. 73% of the shareholders voted yes to give him that package. It was all over the news, thinking that it was so lofty that there was no way he was ever going to hit it. Then he hits it, and a court in Delaware says, no, we're not going to pay it to you. Even though 73% of the shareholders who should have all the rights in making those decisions said yes. So they did a revote. Guess what? 73% of shareholders again reaffirmed his pay package. But the point here is, I mean, is it, who has the ultimate say? Is it the shareholder? Is the shareholder entitled to certain rights? And do they have certain rights to help perpetuate the business? Do the courts get involved? Is there, policy that will supersede shareholder interests? Of course, there's some. And kind of where does that line kind of end up in the end? I really don't know.
I think we can talk about this as well in relation to our next article about $100 billion in funding coming into crypto.
It's a couple bucks, right?
So over the past 10 years, crypto startups have garnered significant investor interest, securing about $100 billion in funding. If you want to learn more about that capital inflow, you can take a look at sources like DeFi Llama and the Block Research. They have it all published. There's a little article on CoinGecko as well that I found. But this money has primarily come from venture capital deals and token sales. Despite the substantial funding, the expected high returns through public listings or acquisitions have been very infrequent, with a few exceptions from big names like Coinbase, where they had an $86 billion IPO. So $100 billion from formal and informal and token investments. JD, were you expecting that dollar amount?
Oddly, yeah. Because I mean, we've been paying attention for a while here, and every month, every quarter, there's, a couple 100 million, 50 million, whatever. There's a lot of investment. Even in the bear market, there was like more investment than we thought. We reported on it a few times, actually, that there was fairly sizable venture investment. What's interesting here is almost every crypto project ends up being venture-backed one way or another. Not all of them, of course, but most of them. And the market cap of crypto is well in excess of 100 billion. So these guys made a couple bucks, which is good. But at the same time, there's a lot of money that has also been lost through exploits and through, fraud and all of these other things. So it's not like they've 20x their portfolios, all of these people, but they've done fairly well. I mean, despite the lack of transparency, there's been a lot of investment. Mm-hmm. One of the arguments, and this is changing significantly right now, and I'm living it firsthand, but the due diligence and the structure around investment now has finally come much more in line with traditional venture, where they actually do due diligence and they actually ask for meaningful reports and validation of your claims. That didn't happen before. It was, I believe it was a lot of, in many cases, not all, in many cases, fairly inexperienced money, fairly inexperienced capital allocators. A lot of these funds started as prop funds. Some guys made some money trading themselves and then started a venture fund. So it's kind of interesting. It'll be interesting to see, kind of what the trends are in funding now. I'm not sure there's going to be less funding. I just think we're going to see larger funding rounds of more established companies. I did want to comment quickly on the IPO point. There's speculation that Eigenlayer is going to IPO at an exorbitant amount of money also, which is kind of crazy. But I mean, beyond those two, how can any company possibly want to IPO under the kind of shadow that they've cast on all this Coinbase litigation? Coinbase IPOs, does a whole bunch of disclosures, and then is forever litigated. To me, that seems a little bit like a demotivator for people to go the traditional route of IPO and to maintain and accrue value to equity. Instead, we accrue value to tokens, which is effectively a non-registered IPO in a lot of ways. It's not, because we have to block jurisdictions and make sure certain people can't buy the tokens and stuff, but it's kind of the same idea. Anyways, all of this to say, it's a lot of money. I think that goes to show there's a lot of people still and previously placing bets on the space. And It's
What
probably
about stable coins? How do you think they play into this? And I ask because they're noted in a couple of the articles that I pulled this from, but the mid 2024 market cap of stablecoins is 158 billion. So should stablecoins be considered as part of crypto startup investment, or are they something that's being held, or how should we like come to terms with these numbers?
That'd be like saying someone has 100 million in their bank account. Does that count as venture investment in the bank? No. In theory, it's just a means of transaction, really, and ideally, in theory, a risk-off environment. Now, it's not. We know that because of foreign exchange, and in this particular case, the value of stablecoins fluctuates. But in theory, it should be a relative risk-off position. So, I mean, a lot of venture will do that. Obviously, they cycle out assets out of certain investments. They take profits or cut losses if they have to. They have cash. Well, they're not immediately recycling said cash into the market. So it sits most likely in stablecoins. You're not going to off-ramp to fiat just to sit and then on-ramp back into stables, usually. That being said, there is a non-zero risk with stablecoins still. Regulatory risk, there's still smart contract risk in some cases. There's always a small but existing chance of some sort of exploit vector or something that we just don't know about yet. So there is a bunch of risks, but nonetheless, I mean, what that says to me is we still have a lot of dry powder sitting there also waiting for stuff to do. So good projects will get funded, good opportunities will be pursued. And that's kind of what you want to see. Proper due diligence, hopefully making smarter investments in, better run companies with more established ideas. It's probably good for the space as a whole. Now, Europe, on the other hand, what's going on in Europe?
Why, on the other hand? I think it's pretty good news.
It's pretty good news, I guess. We just got to get the article pulled up here, and then I will go. Okay. So, recent election of the new parliament is getting everybody all fired up. They're getting all excited and have some optimism for the crypto industry in Europe. And why that is the assembly is expected to continue the EU's favorable stance toward cryptocurrencies, focusing on creating a structured yet accommodating regulatory environment. The shift aims to provide the legal clarity needed for crypto companies to thrive without the fear of abrupt policy changes. To me, this is like, oh, not much is changing. That's what I was going to say. Is this doesn't mean anything different is happening with MiCA. So
in 2020, the European Commission proposed the markets in crypto assets regulation. This is still happening. It is still coming into play in 2024. We have seen over the last 4 years, various different nations within the EU start to comply and maybe even over comply. A couple of them have not come into compliance yet, but they have to by, I believe, the end of this year. Some of the things were by spring, and it's been a little bit of a staggered approach. But I think it's good because we still have MiCA. We know that this is still going on. We're not worried that there's going to be some weird extra curveball being thrown. This is exactly what you talk about all the time, JD. They said this is how you can come into compliance. Here's a reasonable timeline to do it. And now we're doing it. And hopefully, because we have a very pro-crypto EU parliament, they're not going to just tack something extra onto the MiCA bill or remove something from the MiCA bill.
Yeah, the only criticism I have here is they're still not approving licenses at any acceptable rate at this point. Like, there's a lot of people I know that have been trying for a long time to get licensed in the EU under MiCA, and it's a fairly invasive process. So at least there is one. At least there is a process to follow, and at least they're going to kind of continue down the same path of trying to work towards it. I think theory and application are a little bit different here.
Yeah. So I'm personally excited about this because it means that the crypto arms race is still on. We're not seeing a major power backing out. Yeah. But I think that I should know one of the reasons we might be seeing this pro-crypto stance is to continue to compete with BRICS.
Yeah, totally.
We might not see it otherwise.
I think they made another interesting kind of position, or they have another interesting position here. And it's instead of just saying our only focus is on innovation, is on consumer protection, they're also saying that needs to be balanced with the ability to innovate.
Yeah, absolutely. But I think some of that too is because we're seeing TradFi enter enter our crypto space, such as BlackRock's launch of Biddle Fund marks a milestone in bridging DeFi and TradFi. Basically, we expected this. BlackRock was heavy into ETFs. They flipped and went pretty bullish on crypto, and now they have stepped into DeFi. They have an ETH-based tokenized asset fund. This is obviously a bit of a convergence between TradFi and DeFi on blockchain and transparency and asset settlement. But I think it was pretty predictable. JD, like, this doesn't feel left field to me.
No, not really. They are, of course, using Ethereum to invest in, other kind of RWAs on chain and the things that BlackRock obviously supports. I think it's great. I mean, anytime that you see a massive TradFi incumbent coming into the space and expanding their product offerings, I think we'll see some interesting innovation. I think they're doing a minimum 5 million in investment check at a time. I think because they raised a pile. I can't remember how much they raised for this fund, but it was like obnoxious. I think it was like 5 or 6 billion or something.
It's obscene.
What was it?
I said that's obscene. That amount of money is.
It was like insane. It was like an insane amount of money. And so this is cool, but where I struggle is it's not innovative products that are getting a $5 million check from BlackRock. I mean, it might be, but it's way later in the life cycle. I mean, that's like Series A, B type check sizes. So I mean, it's not the little guys that are getting support from BlackRock. It's the big guys that BlackRock probably feels like they can.
Yeah, to me, this feels like TradFi bleeding into DeFi more so than TradFi embracing DeFi. So we're taking the old world way of working and bringing it to our new world ethos, which obviously I hate, but is really good for the space in terms of cash dollar value.
I don't know. I'm not super keen about that because I feel like it's, again, they're trying to instantiate a moat in crypto the way that it exists in TradFi with these like inextricable behind doors partnerships and policies and all this weird shit that all of a sudden it's like impossible for other people to break into the market. I mean, it's hard to compete with BlackRock, obviously.
Really?
As an asset allocator. But anyways, I mean, there's some people that are trying. There's some people that are trying to differentiate crypto from TradFi. Maybe we can talk about PancakeSwap and their Zi-Fi collaboration. Okay, so PancakeSwap has partnered with Zi-Fi to enable gas-free transactions on ZK Sync, Ceara, aiming to enhance user experience and increase adoption. Integration allows users to conduct transactions without the need for gas on selected token pairs, simplifying the DeFi trading process and making it more accessible to a broader audience. Okay.
I love this. I love this so much. Okay, go ahead.
I don't love it. So let you go first, and then I'll talk.
No, you're just going to thrash everything I say. Okay, gatekeeping in crypto. If we want there to be new DeFi users, we can't have these wild transaction fees. We can't have this obscene thing where you're trying to figure out when you should be buying and selling and why is the gas up and why did my transaction get denied and I don't know what's going on and I can't figure out how to bridge my Zi-Fi, which means that I can't pay the gas fee for the thing. So the multiple ERC20 tokens being able to pay gas is awesome. And I think any place that we can get gas free is amazing, which is why I love L2s. That's why I love subnets. If you can operate in the space that you are already playing in without having to pay big fees to some other operator, I think that's a win. Why do you hate it?
I hate it for a few reasons. The only chain, the only Ethereum EVM style chain that actually has gas fees that we all want to vomit over for normal activities is ETH mainnet. And who plays on ETH mainnet at the moment? Not too many people. Like almost everything is happening on rollups now, L2s and other L1s. So, I mean, gas, like this is like 5 years ago when we were all DeFi summer, when we were like,
how much did you spend in gas in 2020?
I've well into the six figures in gas in 2020. It's obnoxious. But anyways, so the simple solution to this, which has been what most networks have done, is whenever somebody bridges in, you also airdrop them a tiny amount of the network token. Because the problem that they're trying to solve here is that if you bridge into a new ecosystem and you don't have the network token, then you have to also purchase and bridge the network token or find a centralized exchange. It's a bit of a pain, but that problem was solved years ago. Avalanche did it. I mean, BNB did it, I think, for a while. There's quite a few, Solana, I think, did it, where as soon as you bridge assets, you get a little dust of the network token.
But
just
that
enough to make a transaction.
L2s.
Sorry?
That isn't as common on these L2s.
I know, but I'm just saying it.
I mean, like, yeah, it's an
very
easy
well
call.
could be
Nobody's using that solution, and since nobody's using that solution, because that crypto dust can maybe add up if they hit a high enough transaction onboarding amount. I don't know. Seems kind of like bullshit, but
yeah,
here's another way they solved it.
They didn't create. Here's what I'm saying though: is they didn't create some sort of like technological advantage here.
Yeah.
All they did was say that we're going to pay the gas fees for you.
Right.
Like actually, that's actually what's happening. Is they're just either Pancake or Ceara, Ceara is going to pay for the gas fees. So I mean, it's the same.
I do think this is a smart move though, just in terms of business and onboarding, because ZK Sync is so big right now, so hot right now, so hot this summer. Everybody wants to play with them a little bit, and so if PancakeSwap can kind of get more users onboarded, not that they're suffering, but if they can bridge some new users over to themselves, this is a really low investment for them to do that.
Yeah, I mean, there's a lot of ways to look at it, and I guess if you're PancakeSwap, you're kind of saying, well, if the network itself isn't doing the dusting airdrop thing, then we've got to find a way to make it easier for people to come over and participate. So, I mean, yeah, I suppose from their perspective, they're trying to do what they think they need to. I just think it's a whole lot of nothing. Like this to me has existed for years, just in a different form. This might be slightly cheaper because they're only going to do gas-free transactions for certain pairs. Right. But what pairs? How do those pairs get decided? Is now the project having to pay the gas fees for everybody swapping their tokens? Maybe. Does that cause regulatory issues if I'm literally facilitating people purchasing my tokens because I'm offsetting their gas? I don't know. So there's, I don't know. I don't love it because I don't think it's as exciting as the PR wires make it sound. Although, I mean, it's a new approach to an existing solution, which is never a bad thing. Might be interesting. Who knows? I'll probably eat my words here and it'll go gangbusters. Everybody will think it's the greatest thing that ever happened. And,
yeah, I'm going to counter trade you for sure.
Yeah, for sure. Go buy Pancake and Zi-Fi.
Okay, to wrap up, I want to share a little bit of a sort of good news story, which is that, you know, up here in Canada, that there was a scam and they got caught. So from 2018 to 2020, crypto accounted for 12.6 million in reported losses within Canada. And by 2021, the Canadian Anti-Fraud Centre reported crypto fraud losses at a total of 75 million. And I believe it was in 2023 that we saw the crypto special unit out of Calgary come forward. And the RCMP is trying to work closely with, which is the Royal Canadian Mounted Police, is trying to work closely with various regional police with those special units themselves. So we're not great at it, is what I'm saying. We are like learning how to build the units, and we're learning how to try to protect consumers from a police space instead of from a regulation space, which is sounds very difficult when you probably can't really afford a crypto tech bro to come and teach your regional police how to deal with anything. So in a very rare success story, the Durham Regional Police Service and the RCMP collaborated to recover and return $55,000 of stolen Bitcoin to a victim in Ontario. They used advanced blockchain analysis techniques to trace the stolen funds to a centralized exchange and then had a successful recovery. JD, is this a win? Is this a big success story, or does it highlight other problems?
I think it's a win in a lot of ways. I'm actually, it's a bit of a feel good for me. I know we discussed a little while ago, and the RCMP, which is equivalent for people that don't know Canada, it's kind of like the FBI. It's a federal police force in Canada. And so when the
police, I don't know.
It's federal.
Yeah, but they have regional
offices and so on. My brother is actually an RCMP officer, which is kind of interesting. But what I find kind of as a positive of this story is I think we've spent the last decade focusing a heck of a lot more on like the securities kind of aspects of malicious activity in crypto, like securities fraud and all of those things. But there's a lot of like plain old theft and plain old fraud and manipulation and catfishing and all of this crazy stuff that happens in crypto because the breadcrumbs are a little bit harder to follow on the surface. They're actually easier to follow if you have the right tools, which is why I was excited when we announced a partnership with the RCMP and Chainalysis, because that would give them the technical capacity and of course the support to be able to pursue some of these investigations. I think, you know, fraud and theft isn't necessarily going to go down, and we probably shouldn't expect it to. There's fraud and theft in every industry ever, and that will probably continue here in crypto, especially as people are pretty naive to the security aspects of it. But anyways, it's good to see that law enforcement, not just regulatory enforcement, is starting to catch up to the space and be a reliable place to go if you have issues. So, I mean, I've been scammed multiple times in the past, and it was too early. Like, you call the police or the regulators and they're like, what? Okay. Yeah. Like, they like take your name and like your story, and then you never hear from them again.
Yeah, it's like having your bicycle stolen.
Yeah, like, oh, my bike. Yeah, okay. Well, if we find it, we'll let you know. But anyways, so I think it's good. It's a good step in the right direction, and I think, you know, at least in Canada, people can be a little bit more confident that if they get scammed, there might be someone that answers the phone and looks into it,
or at least knows what they're talking about.
Let's not get carried away. I don't know if they're going to know what they're talking about, but at the very least, they'll answer the phone.
All right. That's the weekend. That was your news roundup for the whole ding dong dang weekend and Monday, because some of the news was brand new. Friday, we are planning on having a special Friends episode. So come back on Friday.
FUD with Friends on Friday, special episode. You'll have to look at our tweeters and make sure you join us. We'll post probably the topic and time here pretty quick so that people can check it out. And yeah, all right. Well, everybody, have a beautiful week. Markets are kind of crap right now, so hopefully that figures itself out. And with that, I say to you today, Ceara, go FUD yourself.
Go FUD yourself. With that, I have to say, go FUD yourself.
Go FUD yourself.
Go FUD yourself.
Go FUD yourself.
Go FUD yourself. Go FUD yourself.